Okay, one sec. I'm just going to get a coffee and then I'll get going. All right, so end of week overview then. Yeah, I think YouTube is the way forward. I think YouTube's maybe the answer, if I'm honest. So let me just, yeah, okay, let's go for it. So, okay, the last week was, should have been difficult actually. It should have been difficult because of all the news, like the Swiss franc, the election, Euro interest rates as well. These on the right are the trades we had that we were looking for setups on last Sunday. Okay, so these are what we indicated. You know, were the setups we were going to look for, and over the course of the week, okay, we knew what we wanted to see in order to get into these trades. Okay, because that's what we've been taught. Therefore, at the end of the week, we can go over these and say, no, that didn't do what we expected it to do. Therefore, we didn't take the trade. Yes, that one, you know, presented an opportunity and we took the trade. You know, and it's excellent educational tool for everyone here. We say, you know, on a Sunday night, this is what we're expecting. Okay, and then to see it happen, that's like the best tool there is. And for you guys to follow it and, you know, do it like that. Okay, so this is the pound Aussie. Okay, we've got it blue on here because we didn't really have a bias. Okay, because you know, generally this was in a really difficult area, and it was like, well, has it broken through these long-term supply? Hasn't it broken through the long-term supply? Okay, clearly, okay, we got our answer. So we've got this line here. Trading isn't difficult. It's just interpretation of supply and demand. That's all it is, really. You know what? This is the weekly. We've got this line, this level here. Okay, and price was hovering above it, and it was on top of the trend line, and it was on top of this horizontal line. So we can go, yeah, okay, potentially buy, potentially buy. Now this isn't a green, so we didn't actually trade this, but if you have a setup like that, and actually you can see the last week has pushed above this point, so 2 closes above this point, okay, and then you come down into the shorter time frames and see, you know, whereabouts price rejected. And this isn't the best of the pound setups, but what we're looking at this line and we're saying, okay, you know, lovely rejection there. Okay, what about on the daily? You know, what have we got? Okay, perfect. Because the daily close, and then you've got this candle hanging on. That's pretty nice. Okay, but anywhere around here, saying there's a rejection area, we're likely to get a trade back up. And the liquidity dip. Okay, so price was pushing up before you get your really strong. Well, before you get the news, okay, you're very likely to get the liquidity dip. Yeah, because essentially what this is bankers trying to get in the in position for the trade up. Now, the reason I didn't like this one was because of the supply and because, you know, of the consolidation around this point. It is very bullish, but there was much better pound trades to take. Okay, but that's basically, you know, this is a daily, weekly trade here off that point, because that is a daily or a weekly rejection point. Yeah, so, you know, there's a nice move up, and now it's been beaten. I'd expect that to go up to the next range, which would be at about 198 likely, and then we go up to 205, yeah, and whatnot and whatnot. Okay, what was much nicer was the pound New Zealand, and hang on. The reason it was much nicer was because of the price action over the long-term time frame. Now, the difficulty with this, okay, the difficulty with this pair was the fact that it had rejected from a supply here. However, the way it reacted was in a bullish manner. So this consolidation, I would consider bullish consolidation. Yeah, because it's impulse flag. Essentially, it's impulse flag. Therefore, the bias, you know, as long as it was within this pattern, the bias was long. Yeah, and what you get is a double bottom. Okay, and it takes off from that double bottom point into the election. So here's the exit pole. Okay, here's the candle before. That one closes 10 o'clock. Boom. That's the exit pole. Okay, so the only way to get into that really is that, okay, what have we got here? Daily close level. Nice. Okay, we're looking at this daily close here, daily close here, okay, and then the rejection here. So if around this point, if you wanted the double bottom, you could have essentially bought it, you know, engulfing candle. Very, very difficult though. And I said in the Telegram that this was, you know, this was one for the more experienced traders really, okay, because essentially it goes against our rules. Okay, and the reason it goes against our rules is because on the hour on the 4, okay, it's below our blast points. Okay, so it's a below supply trend line, below 2 technically. Okay, but what was most important with this was daily close level. Okay, so it does double bottom and it allows you to get in a position for a long. However, you know, I wouldn't have expected anyone to catch that, but you know, I've always been long on this in this pattern and still am. Okay, so you can see staircasing taking place here. Okay, let's separate your ranges. There's one range. Boom. Where's your next range? Okay, now that top's a bit dodgy because you'd expect it to go a bit higher than that. Okay, but it did reject there. Okay, it came down, smacked on top of the previous box, and then rejected back up again. You know, the way it's sitting at the moment, I'd expect it to keep going, but it is the end of the week now, obviously. So, you know, you're not going to trade anymore. Okay, so we've had a few entries into this. I've made a good bit of profit out of this pair, expecting the impulse through. Now, even the election didn't push the impulse through. The New Zealand dollar's actually been pretty strong lately. So, you know, it's certainly something to look for going into the new week. So that's them two. Okay, what's next? Let's do New Zealand CAD because that's not quite as nice. Okay, so this is New Zealand CAD, and we waited for ages to get into this swing. And the reason it's a swing is because it's a weekly reversal point. Boom, boom, boom. Yeah, so we waited for the swing. Okay, and there's been 2 entries into this, and as you know, I took one of them and I waited on the other one too long. This is the one I took. Okay, I took this one because I was looking at the symmetry between the bottoms. There's nothing fancy about that. Okay, nothing fancy about that. With a decent candle rejection here. Up it goes. Okay, took profit out on the impulse because it failed at the resistance. Okay, then it pushed through, and then everyone had about a week to get in this. Okay, before it pushed to the next range. Yeah, and then when it pushes to the next range, if it fails, you can take profit out, wait for the next setup. What you want to see really is the staircasing. You know, the staircasing up, test, boom, test. Okay, and obviously on a daily trade, that's going to take time to figure itself out. So, you know, there was a really nice, I think that's about a 12% trade on that. Okay, so really, really good opportunity for people. I don't know if anyone actually held it in the end. Yeah. So this week then it provided another opportunity, and it's broken even now, I think. Okay, so what happened was, and the reason I don't really like this and why I wouldn't have taken it is pretty much just because the triangles, okay, it doesn't do its staircase in the way I like it to staircase. Okay, I like it to staircase on top, and technically it did for a little bit and then dropped through. That's fine. Okay, but the reason we could have entered in the end was just because the consolidation here had broken down back to the upside, and there's two entry points here. Potentially if you wanted that next push up, yeah, you take this candle, this big bullish candle, and price is at about break even, just below break even now, or a little rejection candle more at the bottom of the range, more in sync with the symmetry from the left-hand side of the pattern. So, either of them really are an opportunity to enter the trade. And, if we use what we like to use in order to break even a 4-hour impulsive, does that come after either of these entries? And then we can say, right, is that break even? It's difficult. So if you take that big bullish candle here, okay, you can see these on the 4-hour, a rejection to the upside, okay, and then a doji, and then the bearish engulfing, the little baby baby reversal pattern there. Okay, you might have taken profit out of that. You may have lost confidence in the trade. That's fine. In which case you'd have either broken even or made very, very little. It doesn't look great. Okay. This entry down here, okay, yeah, you'd have taken profit after this. Sorry, not taken profit. You'd have broken even after this 4-hour impulsive, because that's generally how we measure when to move our trades to break even. If there's a 4-hour impulsive, okay, you wouldn't technically expect price to move back. So you can move your stop to break even. Price does come down, and it doesn't touch that, and then pushes up. And then it again, if it rejects, and you don't like it because it's rejecting against the previous top, then you just either take your profit out or let it break even. What we're after is the impulse. Okay, so sometimes you've got to be patient and wait for that impulse to come. Yeah, if you take the bottom entry, if you set a break even, that might still go up there. You don't know. Is it worth holding over the weekend? Probably not. Okay, so they don't all play out. This is certainly, if nothing else, a break-even trade. Yeah. Okay, so that's fine. You don't lose anything on this. If you didn't enter GN, then well, you don't make any profit on that, but that's all right. UCAD. And the thing about UCAD is, okay, and I'll say it again. I said it a couple of times, right? So if you're looking for the reversal down from this point, okay, it's got to do one of two things. Now, if price is trending up, okay, but it doesn't touch the point of peak resistance, which is for me that this area here where this daily close line is, yeah, it either touches that line and rejects to take a swing, or it shifts its momentum. And this very much shifted the momentum. Okay, so you can't enter here. We don't enter here because you don't have the confirmation to enter. It doesn't touch the range. It doesn't, it doesn't do anything in here to indicate a sell, really. You don't know that push down's coming. So what you got to do is wait for the retest. And there's the retest. Very strong. Okay, now this is a very difficult trade to enter, and it's doing what UCAD usually does, which is, post confirmation in the opposite way. And this is one of the reasons I hate UCAD so much. Okay, so after this impulse, there's a flag. Yeah, so me and you, the people in the group, okay, won't be buying that flag. And the reason I won't be buying it is because it's in resistance. We don't buy patterns in resistance. Yeah, there's the shoulder. We look for symmetry. Okay, so there's the symmetry. Boom, boom. So it's not a buy at this point, even though it looks like a buy in formation. So the two ways you can enter that, and sort of touched on it in the Telegram channel, was, okay, some kind of breakout trade, either here, or breakout trade of this pattern. Yeah. So as you know, I don't really take breakout entries. Okay, but a lot of people do. Some people in the group do. Okay, I know one person took this entry. Yeah, which, you know, if you put it above that stop there, it goes to 2 to 1, which is where it goes to a lot longer than 2 to 1. It goes to about 3, which would be 6% if you took profit out right at the bottom. Okay, so TP1 area is obviously going to be the previous area of demand. So if you can get squeeze a 2 to 1 trade in there somewhere, then you're going to be all right. Okay, so that's 2.53, so that's a 5% trade. Or if you took a breakout at the top on the big candle, you know, it gets to 2 to 1 just about. I'd take profit on this personally. You know, impulse before the weekend, not the best price action in the world. Okay, it's reached 2 to 1, so we can be happy with that. 5%-ish, 4 or 5%. Okay, you take out of that. Tishan, if you're watching, let me know how you've done on this trade, mate. So that's UCAD. USD, Swiss franc, and Euro USD. So USD Swiss franc was the daily candle from last week. Okay, trading with the trend. So, you know, the epic fake out at the top, pulled in all the buyers in and then dropped through. We took the sell here, we took the sell here, took the sell here. Okay, and have been trying to catch the continuation since. Now, we haven't been trading it up because generally that's against the trend. But last Sunday, we saw the little flag pattern on top of the range here. Okay, I thought there might be an opportunity there. Okay, so, you know, a little rejection at the bottom of the range, then a little push up and a little flag and a potential opportunity. But that's, you know, that's 10 o'clock Sunday night. I'm not going to take anything here. I'm at least going to wait till Monday and it drops through. So it's fine. Yeah. What I like about this is we then had the short. Okay, so we were looking short from about here. Okay, so a bit of a dodgy bottom. Okay, but essentially it was price action. So if you're saying this is the previous level, therefore this is the resistant level. When the formation like this appears, it becomes a fairly decent trading opportunity because all it's doing is staircasing. And with the Swiss franc news, that could have easily gone all the way down. Yes, it's a setup for the news. Okay, that's what it does. That's why we don't really need to watch anything fundamentally, because price sets up to move in the direction it does often. Okay, again, okay, a breakout on the hour there. Trade it down. Impulse on the 4. Yeah, break even. Trade breaks you even. Now, if you didn't break even, you'd be in a little bit of profit. And again, it's up to you whether you hold it over the weekend or not. I prefer to protect accounts and catch the impulses and protect accounts. And then if I do that, I can often make 10 to 20% a week. You know, if I don't, it's fine because I don't lose. So, you know, even though sometimes you have weeks of break even, you know, grinding weeks, 1 to 5%. If you catch the impulse, you're good. You know, you can then, you know, you're good for the week, the month, whatever. Okay, so I mean, all about catching the impulses, unless it's a specific trade opportunity, such as the pound pairs. Okay, so, you know, you'd expect that to keep going down. We'll look for a trade entry next week. Euro USD was similar. Okay, it was opposite as well. So what we were looking at was the sell from this point here. Okay, we've had the buy. Okay, we should have stuck bias on the buy. We've traded this multiple times. There's been about 5 to 8% on these two, and about 10 to 12% on this push before it rejected. In fact, yeah, that's 12% up to the point at which it broke down. So, you know, awesome trades on this pair lately. Okay, perfect price action buy, perfect price action buy. So this flag presenting itself, and it would, because it's opposite to the USD Swiss franc. So the setup on that is going to be very similar to the setup on this, except opposite. Okay, so there's a rejection through this line here, potential entry point. So what the option was, and we talked about it in the Telegram, if you took a short here, where would your stop loss be? And if we do it how we usually do it, okay, where does it reach? The 50, reaches the 50, sorry, it rejects against the 38, so you put your stop loss above the 50 at least. So little rejection candle, 50 plus a few pips, which means you're safe in this trade. You're looking for price to get down to the bottom again. Yeah, it gives you an 8% trade on opportunity. Yeah, because we risk 2% per trade, right? 4% per currency, standard settings. So even though it drifts up, it pushes down. Do you have the opportunity to break even? You do. Would you? I'm not sure. So, you know, if you took that, you may have taken a loss. I'd certainly suggest if this failed, this impulse then failed again, you cut your losses. You know, that would be a good place to cut your losses. And so many people are afraid of cutting their losses. But essentially, if it rejects here, you know, it's likely to at least push back to the top, maybe stop you out anyway before dropping. You want some kind of impulse through at that point. Yeah, so you've either lost a couple of percent or, you know, or you've cut your losses, which is what wise people do. Okay, but you have to be able to see why to cut your losses, and that's the thing people struggle with sometimes. So there is the push, okay, against the top and the retest. Okay, so if we were looking at this, we may have looked at taking this trade, okay, this buy, okay, because it's broken the level and retested the levels, standard retracement test, and obviously that hasn't followed through either. That's the exit pole last night. That's retraced all the way back down again. Okay, obvious area of rejection. So if we did take that, there's our area of rejection. There's take profit one. And what people, you know, overcomplicate Forex so much. I'll tell you, it's absolutely insane. They've got all Fibonacci levels to take profit and all this kind of stuff. Just look for the places it rejects on the slightly higher time frames. It's that simple. Yeah. Okay, so that's that. All right, let's move on to some more. Okay, let's look at these New Zealand pairs, because I don't think anything really set up on these. Okay, so this is New Zealand Swiss franc. What we were looking at essentially was, you know, not the greatest sell in the world, and the reason for that is because we had it short here. As you know, I lost a couple of percent here, and then it pushed up as rejecting here. Now, technically, Blash rules would stop you getting into a trade here because it's above this rejection point, right? So this wasn't really followed in the setups channel unless it broke down considerably, because at the end of the day, if it does break down, you know, I was looking at this wick being filled over a period of time, and this is a trade that you'd be more likely to hold. And as you know, I held this trade from here quite a while, and it stopped me out of 1%. Yeah. So I wasn't really looking to get into a trade in this area because it's not appropriate for how we do things. However, people noticed it in the setups channel, and we saw the Swiss franc get weaker, or New Zealand dollar push up to the 618, at which point it does post some rejection, okay, in the form of a rejection candlestick, an engulfing candlestick. Yeah. Now, this is similar to USD UCAD. Yeah, it's moved up so strong that I sort of want a little bit more to confirm a sell on this before I'd sell it. 4 hour shit doji, not great, doji push. 4 hour looks like a flag. You know, would we have taken that entry? No, not in this area. If you take this range, bring it down to an appropriate area, you know, like this range top. If you get it here, yeah, fine, you take it. This one, I don't think that's good enough. But let's say, for instance, you did take that. Okay, we're only really covering this because it was mentioned in the Telegram. Okay, let's say, for instance, you did take that trade. Okay, did you get to a break-even level before you got stopped out? Okay, so you took the trade there. Okay, I'd suggest you did. Maybe after this candlestick, you'd probably break even. So, yeah, you potentially, if you did take that, you potentially didn't lose anything. But you know, it's a bit of a dodgy positioning, if we're honest. You know, as soon as you see the flag pattern come in, you know, it might be worth just taking profit anyway. That's your call. So there's nothing on that, which means there's also going to be nothing on New Zealand yen because, you know, we look at them as a pair because they move the same way generally. Okay, obviously the yen weakened considerably today and price pushed up. So, you know, we're on trend traders really, but there wasn't any buy-in. So what I was looking for, similar to New Zealand Swiss franc, was the rejection back through the level and then the test and then the short. That's the only way we can swing. It's the only way you can swing trade successfully is when you're trading the first retracement, the first decent retracement. Okay, so there's nothing there. Okay, there's nothing on New Zealand Swiss franc, there's nothing on New Zealand yen. And I don't think there's anything on Euro New Zealand either. So let's load up some Euro pairs. Okay, so Euro New Zealand specifically waiting for the trend line break, and the trend line break hasn't come yet. Yeah, therefore we stay away until it comes, because you know that everyone else in Forex is trading it short because it's going short, which means it must, you know, they don't have a lot of people don't have an appreciation for positioning of where the price is. What we do is we use patience and we wait for it to break, we wait for it to test somewhere, and then we take the trade. You know, this is rejecting to the downside again. So if you think about pound New Zealand, they move in a similar way. Okay, there wasn't as much follow through on Euro New Zealand. So the euro didn't take the news of Brexit, of the election as well as the pound did. I'd suggest, given what's happened here, it's likely to push. All right, which is good because there's no confirmation for a sell anyway, which is fine. So we move on. Okay, so we move on to the pound Swissy and euro Swissy. Okay, so the pound Swissy has it's come back a lot today. Okay, but what I want to point you in the direction of is where we've been tracking this trade for a while off the EMA we use. Okay, so this consolidation from you know, the 16th of October to it starts pushing on the 14th of November. So literally a month in this tiny range. So it's always going to explode. Okay, so what we were using the EMA and we followed it in the setups, okay, to just hold that price up. Okay, and it held it up and it held it up. We didn't want to go long below this level. Okay, so when it came above the level, it gave us, you had permission to then go long. Okay, so the setup was daily candlestick, EMA 17. Okay, now the new candles start on the at 2200. So technically, if you waited for that candle to finish, you know, you've missed it because the exit pole was at 2200 and price bombed up. Okay, so it's sort of a case of the only way you're going to get into this really is to take that candle. Of course, at that point, what would you expect? If you break even after an impulse, then you break even before it shoots up. It really depends on how you want to play the trade, because if this is a daily trade, which it is, and we're tracking it on the daily, do you want to give that trade room or not? If you're in this trade and price dips down before news and your stop loss is down here, with the spread when the news hits, you're likely to get stopped out anyway. So it's very difficult to win with news trades. Okay, it is very difficult. So you have to be in early on them. If you want to win them, you have to be in early generally, because if you enter, let's say you did enter long, okay, after, let's say, oh, actually, that's a pretty good entry on the hour. That's a pretty good entry on the hour. That's hours what we usually enter trades on. That's pretty nice, actually. Just looking at that engulfing candle there. Pretty good entry. Yeah, so we'll take that. Okay, so you're looking on the daily. Okay, price being held up, great trend trading. Let's look for an entry point. Hello. you could take that. Okay, you could take the news trade off that, get in nice and early, stop down here somewhere. Difficult because you're likely to get stopped up by manipulation on news trades, but then boom, up it goes. Yeah. So what's interesting about the pound pairs is that the sentiment. Okay, so I know I put this on the Facebook page. Okay, the sentiment of the pound at last night was about 27% long. Okay, and the reason that's so important is still only 30% long. The reason that's so important is because if you remember that, you know, most people fail at trading forex, like 80–90% of people fail. Yeah. Well, only 30% of people are trading on trend here last night at 10 o'clock. It was up 27%, which means you must be with the winners, because all the newbies want to trade the swing. Okay, everyone loves the swing trade because they see more profit in the swing trade. Okay, 70 to 80% fail, let's say 70% are short. New Zealand, you know, only 28% long. New Zealand's been pushing up for quite some time. So even though I wasn't buying in New Zealand against the safe haven currencies, I wasn't selling it either until it had a significant breakdown. Okay, with people selling tops here. Right, that's the interesting thing about that. Okay, so pound Swiss franc, let's see where it rejected from. You know, it doesn't take a rocket scientist, okay, to figure out that it's going to reject in an area of previous tops. Yeah, so maybe you would have expected it to go a little bit higher. Yeah, and the thing with trades like this is, how greedy do you feel? Because let's go back down to the hour and let's look at that candle entry, right? Where are we going to put your stop loss on this? This is a nice little double bottom. Again, rejecting through that line. Lovely. Okay, let's say you take this trade out after that candle. Okay, how greedy do you want to be with your trading? Okay, are you still holding it, or have you taken profit out? Well, you take it after that, you have a reasonable size stop loss to you know, counter for manipulation, for instance. Okay, you've got a little bit of Fibonacci on here to give you a decent position for your stop loss to go based on confluence, maybe. Okay, fine. So with that, you say, okay, great, I'll put my stop loss beyond that 50%. Okay, so if you take your money out at the top, that's 7.2%. Now, how do you know to take your money out at the top? Okay, well, it's very, very greedy when people, you know, trade ranges. Okay, we trade in ranges in trends. If you're expecting price to hit that top there straight away, okay, you're in for a shock most of the time. So give yourself levels. Yeah, this is a decent one. This is a decent one as well. How much profit do you need before you at least take some money out? Yeah. How much profit do you need? So let's say you took half the money out of the top. You know, you made 3.66%. Price retraces. What do you do now? Move your stop profit up? Did you move your stop profit up to here? Did it get hit? Yeah. Either way, if you're in this, you've made at least 5% last night on this trade alone. Yeah, and this is one of the weaker ones. Yeah. So tracking it on the daily, yes, the price action does indicate that it's likely to continue going. You know, it is likely to continue to this top in time. Okay, but it's often not going to get there in one candle. So take your profit out in stages. Okay, so, you know, that is likely to complete. Okay, because that's how we trade in triangles, right? But at the end of the day, what we do with these overviews is we prove what we've seen, and time again, we prove what we see. Okay, because then there's no doubt about the authenticity of what we teach ourselves. We don't show profit. We don't talk about how much money we make. We don't do anything like that. Okay, because it's pointless, because it's emotional. We look at something and then prove it by watching. Yeah, prove it by trading it. It's the only way to do it. Okay, so that's the pound Swiss franc and pound euro Swissy then. Okay, another epic failure to the downside. Now, the interesting thing with this one, okay, we want to forget all of this on the right. Okay, this is, you know, this is a break-even trade again. All right. Now, this was on Sunday night. Okay, into Monday morning. We looked at this. We expected this flag to happen. All right, 10 o'clock Monday morning, it went down. You know, with a fairly, you know, not the greatest candlesticks, a doji on the 200 moving average at the 61.8. You know, wouldn't really trade a doji. The next one's a bit doji-ish. So you might say, no worries. You know, I'm going to wait for some kind of breakout just to give me the confidence that it's going to follow through. And, you know, if you get in there, you know, price doesn't really move down to an area that gives you enough confidence, you know, well, to take profit really, because we want to catch the impulses. It moves down to about, you know, a 2.6% and then starts retracing back up. Now, you might, the way to do this, if you see an impulse like this, you might move your stop down a bit. You might just take profit out after that candle. It's up to you how you manage it, but there's no re-entry point into this. So at the end of the week, you know, essentially, it's just a break-even trade. So that's how we'd calculate it. Even though most retail traders will let it go to 0.5% and maybe take all their profit out, even though they risk 2%. And if they do that, they're never going to make it as traders because you need a decent risk to reward. Okay, so either break even, you know, or let it travel to a decent risk to reward. Okay, so beautiful trade, okay, doesn't follow through. That's fine. We move on. Okay, let's look at some more pound pairs then, because we were looking at pound yen and pound dollar. Okay, so Cable and Guppy, that's their names, both long. Okay, so now the pound USD, okay, the entry point really is last week. Do you remember when I took that pound yen trade? Okay, same position. So what we were looking at is what the range and then the little baby flag outside of the range. And the pound yen was a lot better than this. Yeah, for me, the pound yen was a lot better set up for this. But you can see, okay, really that push, you know, was really nice. Okay, it's based on this. Okay, it's it's about the 1.3 level. Okay, we're looking at the area where these wicks are rejecting consistently, the top of the range. Now, the reason I didn't like this one as much as GJ was because it was still within these wicks, but it, you know, the setup there is very, very nice, very, very nice still. Okay, a rejection below, you know, one of two entries back then. You know, a couple of rejections there, potentially, you know, take trades based on them. Up to the next reversal point. So go on the 4 hour, let's look. Okay, maybe, you know, that top there is fair. Yep, that's pretty nice. Okay, so if price gets up to there and starts rejecting, then maybe you want to take some profit out. So let's say, for instance, okay, it rejects, you take half your profit out, rejects again, you take half your profit out. So, you know, so you don't really stay in this trade either, because essentially, if that's the reversal point, you'd expect it to push and test, and obviously it doesn't do that. Now, if you hold it, okay, sometimes those rewards are fantastic because you'd hold it all the way up to here. The problem with this, and the reason why I wouldn't have been long on it, is because it didn't retest the previous area. 1.3 is the strong area here. Okay, so when it started dipping, I was expecting it to touch 1.3. Now that liquidity pool didn't come. Okay, it went early, so to speak. Yeah, just a tad early, so we don't really get an entry on that. Okay, now technically, I suppose you can enter after that, but it just doesn't retest, which is one of my rules. Okay, so you know, essentially, there's no trade entry on for me on pound USD. But again, proving the system. Okay, proving the system, proving the price action. Boom, up we go. Pound yen, much better. Okay, so I've got my bail line, and my bail line is specifically there for a reason. So when I was in the buy, and here's the buy, I made about 7% on this buy here. That point's there for a reason. So if price was flagging here, and what I was doing is if price drifts below, that's my bail line. So I'm going to let price drift back up, and then I'll take profit. So essentially I took profit out of the trade at about this point. Okay, because it looks like the price action to go short, so there was no point holding it, right? So there we are. That same point gets rejected through twice for the buy. So technically, you can enter long based on that. I mean, difficult, okay, but if you take that candle, or even the engulfing candle there, okay, you're in the trade early, and there's the trade up, and it hit my line, my take profit 2 from the previous trade. So perfect. So I don't hold past 2p2s, as you know. So if I did hold it through that whole thing, and I didn't see the need to, because we didn't know what was going on with Brexit back then, and I like to compound my trade as we go, compound my account. If I held that whole trade, that's a 17% trade. Okay, and we saw it coming, and it's all based on the daily movements on this pair. Like most of the pound pairs, incredibly bullish price action. So you go on the daily. Yeah, again, it doesn't retest previous structure. Okay, but the reason we like this so much, and the reason it was traded in the first place, was it's just a bog standard retest of previous structure. That's all it is. Okay, wicks through, wicks. Okay, range, beaten, test, boom, 17% if you hold it, or in my case, 7.5%. Yeah, so that's what I wanted to happen, but given price action on a Friday last week, wasn't prepared to hold it over the weekend. I'm not going to be greedy. I'm just going to take my 7.5%. That's my week done. Easy. Yeah, boom. Okay, so again, what we saw happened. Yeah, and there's the rejection through REMA. Okay, so GJ, very, very nice. What else did we have? Swissy yen and pound, euro pound, sorry. Okay, again, both of them have moved in the direction we wanted, from the area we wanted it to move from. Okay, so Swissy yen. So this trade, brilliant. Yeah, basing it on the double bottom all the way down here. Okay, so yeah, after the double bottom, we started tracking this, waiting for a specific entry point, and we looked for the breakout of the pennant. Okay, and it dropped, but we didn't go short. Okay, because we're playing off the demand. We're playing off this demand. Okay, so even if it dropped all the way down to here to test this area, we're still long. Okay, we're still looking long based on this, what happened here. Okay, now it didn't drop that far. What it done is it went back and it done exactly what we were looking for in the first place here, on top of the range. Okay, there we are. There's the range top. Okay, it's beaten it, it's tested it, up it goes. How easy is that? Yeah, so 4-hour candles, a bit dodgy one to take. The engulfing, maybe. Yeah, a little bit of a wick out the top, but maybe it's an engulfing candlestick after a rejection. So, not bad at all. Testing through the line. Hourly. Okay, little reversal there. It doesn't matter which one you take. You take that one. Maybe you'd even take the bullish one, the big long one. I don't really like the long candles. But it doesn't really matter because it pushes up like a steam train. and I bet it rejects at resistance. I should add that, you know, I've not been trading that much this week because obviously, you know, it's coming up to Christmas time and the markets are going to get a bit dodgy. But lo and behold, there's a TP1 point. There's a very obvious TP1 point there. Okay, which means if you're in it, you're taking your money out. And to be honest, that moved up so quick that, you know, you take all your money out there. Likely you're going to take all your money out there. Yeah. And even if you're still in it, you've made a decent amount of profit. So, you know, these are stuff we pick on the weekends before. And we say, right, we want this to happen. We want this to happen. We want this to happen. And more often than not, okay, in the trades that we are specifically looking to buy or sell, we only really trade it if it happens, if what we want to happen happens. Okay, so on this, even at the most extreme stop loss position below the confluence, you know, a rejection at the top, take profit, that's 6%. Okay, put it beyond the 50, that's 9.4%. Put it beyond the 32, ultra aggressive, and that's 16%. Okay, and it's just because what we expected to happen happened. Perfect. Okay, the kind of trades that we take that don't stop us at break even, that reach their potential. And theirs is the obvious potential, okay, based on previous structure. Very, very obvious. Beautiful little trade, that one. Beautiful little trade. Okay, so tracking it here, patience, 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 patience. Boom, finally, something's arrived that I can trade. Perfect. Perfect, and that's how you make money. Patience. Okay, pound, euro pound. Okay, you know, the setup was so simple. So simple. Previous structure. If that's a demand area, that must be a selling area. Okay, it's in a downtrend. Wait for the retracement. Hello, boom. How difficult is that? You know, you tell me how difficult that is. Yeah, that's literally, we came on the overview last Sunday and said, look for that area to be hit. And it's not difficult, like it's not looking for specific manipulation points, nothing like that, just some kind of signal to enter. And, you know, 1 or 4 hour candles. What's wrong with that 4 hour candle? Nothing. Okay, so where does it reject? Rejection point. Slightly lower than the rejection point. So you'd have your line there, for instance. There's a take profit 1. Do you hold it? Well, you know, price is still moving all right. 1 hour. Okay, there's your entry point on the hour. Oh, that's a 30, sorry. Engulfing after the test. Beautiful thing. Yeah, so again, you know, even on that 4 hour candle, if you're using that as your signal, you know, PardoFX paid for itself for a month. Yep, that's fine. Put it above the 61.8. 4.5% ish down to take profit 1. You're probably still holding the other half. It's coming back down again. Up to you whether you close it or not. Yeah, simplicity is the key. Yeah, we had it selling here as well. You know, you remember a couple of weeks ago. Sell from this point. Look for a rejection at this point. Okay, we didn't get in because I expected it to come back. But essentially, it still happened. You still be in this. Okay, I'm very rarely wrong, and I don't mean to sound pig-headed, you know, when I say that, but you know, as you know, you guys have been following me for a while. Very rarely wrong when it comes to this stuff. I've got a knack of getting it right, and that's why, you know, people do so well, you know, learning it this way. Because, and obviously we're not really learning that much now, we're just going through the trades. But yeah, okay, so again, AJ and Ord Swissy, Ord Swissy and New Zealand Swissy, very positively correlated. They'll move much the same way. So if we take what we said about New Zealand Swissy and New Zealand Yen, apply it to this pair, okay, and then move on with our lives, because there's no point talking about these because they didn't move anywhere near any kind of setup position. And we just go straight to, let's look at pound CAD. So we've got pound CAD blue, we've got Ord New Zealand blue. So let's have a quick check of them. Okay, so pound CAD is a lovely little liquidity dip before it pushes. Now, you know, that looks like it's going to go up again, if we're honest. So what we've got here is, okay, look at the tops, the more established tops. Okay, you could pick that one where price reverses sharply. That's the areas you want to concentrate on. Okay, and there's the liquidity dip to that, through that point, okay, to suggest a potential entry long. And then go on a 4 hour and it looks much more like a retest point. And then you go on to the 1 hour and you say, yeah, okay, I'll take that. Okay, there's the liquidity dip before the move up. So there's your candle. You know, if you go in long, there's your rejection candlestick, or your engulfing candlestick. Either of them will be fine if you wanted to trade this up. You know, and if you did, let's apply some usual stop loss stuff. 50 there, you'd have to protect against the 61. So even if you took that engulfing, protecting against the 61, fairly big stop loss, 127 pips, rejects it, almost 500 pips profit, 7%, 7.4%. Where does it reject from? Okay, so you're looking on the left over here. Let's take that point, okay, and use that definitely as a take profit level. Take profit one, comes straight out. Okay, you might hold the second part of the trade. There's 3.1%. Hold the second part. You might take the rest of your profit out there. There's another 2.71. You know, so you should make at least 6.4% on this trade. You may still be holding it. You know, it's up to you. But 4 hour nice, 1 hour nice. Okay, we should have been watching this one more closely because that is an excellent trading opportunity. Okay. Ord New Zealand. And this is the last pair now. Okay, so exactly, you know, what we said at the weekend, last weekend was, okay, it was pushing up to this point. So we're really looking, we're not going to buy the swing here because essentially we don't pick bottoms. We're going to wait for the push and then the test and maybe look at it. But for me, I think Ord New Zealand is more about pushing through and then testing this area, if I'm honest. You know, there's nothing on this at the moment. We're just looking into the future. Okay, this area is the key one. Okay, you can see all these rejections here. This is the key one. Okay, so until it actually pushes through properly and tests it, we're not even going to consider entering this. Yeah, I am expecting divergence down. You know, to be honest, I probably won't take this trade when it does set up because I don't think it's nice enough. It's too much of a swing trade for me at the moment. Okay, obviously we're not going to sell it here because of all the demand, but certainly, you know, this is more no man's land, and this is more the selling opportunity once it gets below this point. Yeah, I mean, to be honest, I'm probably not going to look to sell this at all because the trend is coming down to its saturation point where it's very likely to finish because this is the demand zone. Ping, ping, ping. So ultimately, we're not really going to wait for sell price down into that demand. That's not common sense. So we'll wait for it to push back up and then test here and then take it long again to confirm the swing. All right, and the last one, New Zealand USD. So someone got in contact with me earlier. They made some decent, a really good trade on New Zealand USD. So congratulations to them. And more of you, if you take trades, let me know how you get on with them, and then we can talk about them in whatever format you want to talk about them in. This is the last one now. Okay, so New Zealand USD. What I wanted. This is the pound USD. It's not that one. Where is it? Here it is. Okay, so I wasn't going to buy this. Essentially, what we were waiting for was to push all the way back down to 644, okay, to then confirm the trend up. Now, as you know, we've had multiple successes on this trade, on this trend reversal. Ping, ping. We traded that down, ping, okay, and then, well, we knew it was going to go up, so we didn't sell it here because we're trading the trends. The reversal's been confirmed. Don't sell that pattern. So if you're going to sell it, trade outside the pattern really. And that's just rejected off the trend line today, which is quite a nice confirmation. Potential head and shoulders setting up there. That might be decent short next week because on trend continuation perhaps. Now it's reached those trend lines. Not bad. Okay, so the buy didn't set up because it didn't drop down to here. But if we go over these pairs, then what have we seen? New Zealand CAD, it's a break-even trade really at this point in time, dependent on entry. GA, we've watched it push, retest, and go long. Okay, just watch that one. Pound New Zealand, okay, it's gone long from the double bottom, which we expected, but there's a highly risky trade, that one. UCAD, yeah, easy 4 to 5%. USD Swiss franc, okay, break even. Euro USD, break even or lose 2%. New Zealand yen, nothing on that. Euro New Zealand, nothing on that. Pound Swissy, I think we said about 7% on there. Euro Swissy, break even. Pound USD, you would have had to be holding it. It wasn't really an entry point for the election. So we're going to say nothing on Pound USD, even though it went the right way. GJ, if we count my entry last week, then we're looking at 17%. If we're counting the entry we looked at tonight, then I think that was about 8%. Swissy yen, I think, was about 12%. Euro pound was about 5%. Ord Swissy, Ord yen, nothing on them too. Pound CAD, easy 6 to 8%. Ord New Zealand, nothing happened on Ord New Zealand. New Zealand USD didn't drop down to the point we wanted. So, obviously you're not going to take all the pound pairs, okay, because you risk 2% per currency. So, if you were trading the pound up for the news, you got Pound New Zealand, Pound yen, maybe were the two ones for me really. So there's, I don't know, 4 to 6% on Pound New Zealand, about 8% on Pound yen, so that makes about 14. Swissy yen was the other 2% of our yen pairs, so there's another 8 to 10, 8 to 12% on there. You've got 2 pound pairs, so you went to trade euro pound, blah 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 blah. Okay, so it's 20% weak really. Yeah, a couple of break evens, potentially one loss, and a few wins. Yeah, good week. Yeah, so if we just, what I'm going to do is I'm just going to cancel out the ones that didn't provide any confirmation in a new, so we can analyze these. Okay, New Zealand CAD, yes, there's an entry. It's okay. It does all right. Okay, it's potentially a break-even trade now. Pound Aussie, watched it. It was very interesting. We'll remove it. Pound New Zealand, yeah, that's a win. Excellent. Pound USD CAD, yeah, that's a win. Excellent. USD Swiss franc, break even. Yeah, fine. Euro USD, we'll leave it on there because it's a potential loser. Let's put all our winners in green, losers in orange. New Zealand yen, absolutely nowhere near an entry point on that, so we remove it. Same with Euro New Zealand. Pound Swissy, yeah, good. Euro Swissy, break even. Pound USD, yeah, good, but no entry point, so we remove it. Pound yen, yeah, excellent. Swissy yen, excellent. Euro pound, excellent. Order Swissy and order yen, nothing. Pound CAD, good buy, excellent buy, but we had it blue, so we remove it. Or New Zealand, remove it. It's blue, still setting up. New Zealand USD didn't go back down to the entry point. So these are the trades that actually done what we wanted them to do this week. Okay. Potential small profit or break even. Profit, profit, loss, profit, 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 profit. Narrow it down even more. 4% per currency. Pound New Zealand, pound yen would have been my two choices. You know, there's 10%. New Zealand CAD, it's floating. I'll probably take profit on it now. Euro USD, okay, lost 2%. Swissy yen, earned 10%. You know, add it up. That's a good week. All right, so I'm not going to take up any more of your time, but as I always say to you guys, if you follow these and they do what we talk about all the time, there's a lot of money to be made. Yeah, and I'll apply the philosophies that we talk about all the time. There's a lot of money to be made. Yeah, okay, I'm not going to take up any more of your time, so thank you very much for coming on. I appreciate it, and I'll speak to you soon.